Good noon to everyone. This is Dr. D. Kartika, Department of Commerce with Computer Applications, Dr. S.N.S. Rajalakshmi College of Arts and Science. Today we are going to discuss about the tax income and tax liability in case of the series in your corporate tax. I think you must have well understood what we have discussed in the previous videos regarding what is your company and what do you mean by the corporate tax, what do you mean by accrued income and receipt of the income, everything. So today we are going to discuss about the tax income and tax liability. Only when we understand this crucial term of calculating the tax incomes and tax liabilities, we will be able to understand how the individuals and the companies are assessed under the taxable income for the tax purposes. Okay, so here listen to the taxable income. It is the amount of income that is subject to the tax after accounting for allowable deductions, exemptions and adjustments. It is the income on which the tax is calculated. So for the individuals, it includes all sources of income like your salary, business income, rental income, capital gains and other earnings. But for the companies, it includes revenue from operations, interest income, dividends and any other income. I repeat, only for the companies it includes income from operations, interest income, dividends and any other income. And for relating to the deductions and exemptions, we have given a comparison to the individuals and companies. So for the individual, deductions might include investments under the section 80C, example life insurance premium, provident fund contribution, etc. And in case of the companies, deductions include business expenses, depreciations, interest on loans and other allowable expenses. And then adjusted gross income, it means for the individuals, after applying the deductions and exemptions, the adjusted gross income is calculated, which is then used to determine the taxable income. But in case of the companies, adjustments are made for any allowable deductions and expenses to arrive at the taxable income. So now you are having a clear picture of what is gross income in case of companies, what are the deductions and exemptions and adjusted gross income. Okay, the next term I have given you an example how to calculate the for the taxable income in case of an individual and a company. Has a comparison to understand. For an individual, for gross income, say for example, that is including your salary income, rental income, capital gains and other expenses, it may be for 10 lakhs and deductions is 1,50,000. It may relate to any health insurance or it may be relating to any savings, etc. So taxable income will be 10 lakh minus 1,50,000. That is your gross income minus deductions. It will be taxable income will be 8,50,000. In case of a company, when your revenue is 50 lakhs, so how to calculate your deductions? So deductions, it may be your business expenses or your deductions. So it will be, for example, 20,000. That is your salaries, rents, depreciations, all your business expenses. So gross revenue is 50 lakhs less your 20 lakhs, that will be your 30 lakhs will be your taxable income. So this is the simple term to understand what is your gross revenue for a company and what is the expenses for your or the deductions for your company. So what is the taxable income? Gross revenue minus your expenses or your deductions. Now coming back to your tax liability, it is the amount of tax a person or a company is required to pay based on their taxable income. So it is computed using the the applicable tax rates and rules which is prevailing. So according to our financial budget, it may vary from each financial years and some amendments it may be implemented. So determining the taxable income, applying the tax rates in case of your individuals, it may be for example in India it may be for 5%, 10, 20 or 30%, but it should not cross your MMR, that is your maximum marginal rate. And again I am specifying you, it is progressive tax system. Higher the level of income, higher will be the tax rate. Lower the level of income, lower will be the tax rates. But in case of your companies, tax rates are typically fixed percentages. For example, in India, the corporate tax might be 30% for most of the companies, with the different rates for specific categories like manufacturing companies or your salt companies. And calculate the calculation of the tax rate. In case of an individual, apply the applicable rate of different income slabs and determine what is your tax. But in case of your companies, apply the corporate tax rate to the taxable income and add any applicable cess. Cess is also again your tax, additional tax, and surcharge is also an additional tax. And again you have to adjust your TDS. TDS is your tax deducted at source, which has to be compulsorily deducted. And I have given you an example of how to calculate your individual for an company. For an individual, it will be 8 lakh taxable income. For example, it is 8 lakh 50,000. For the financial year, I have given you 23-24. So your here will be, that is your assessment year. If it is 24-25, a financial year will be 23-24. So income up to 2,50,000, it is nil, and again income 2,50,000 to 5 lakhs, so it will be 5% of 2,50,000, so 12,500. And again 5 lakh to 8,50,000, we are calculating 10%. So the here the 3,50,000 difference, so 10%, it will be 35,000. So total tax 12,500 plus 35,000, it will be 47,500. If you have an additional cess we have to give, so it is 4%. So 47,500 into 4%, 1,900. So total tax liability paid by an individual, it will be 47,500 plus 1,900, it will be 49,400. Okay, and coming back to your company, taxable income, for example, if it is 30 lakhs, corporate tax rate is 30%. So tax calculations, 30 lakhs into 30%, so it will be 9 lakhs. Additional cess 9 lakh into 4%, 36,000. Total tax liability, it is very simple, 9 lakhs plus 36,000, it will be 9 lakh 36,000. So now I think you are able to understand what is your taxable income as well as your tax liability, how it is calculated in case of your individual as well as in case of your companies. I have given you a comparison of individual and companies because you have to understand how to calculate even for an individual. So it will be practically, it will be useful for you. Okay. Thank you so much for watching my videos. Kindly keep in touch for the further videos. Thank you so much.